Alright, so I am low-key excited about making this video because despite the jokes you'll hear in this video, it's gonna be one of my best because what happened this week was monumental and I think it changed the course of investing forever. People just don't know it yet, but this video is the reason why I have never taken a single sponsorship and why it gives me the freedom to say what I'm about to tell you in this video. So I promise I'm gonna connect all the dots together and then your mind is gonna go First, I want to introduce you to WallStreetBets, the place where they make millionaires out of billionaires. But if you've been living under a rock, WallStreetBets is a part of Reddit, which is basically a social media platform that's similar to online forums. Now inside of Reddit, there's lots of other sub-communities or subreddits with things like technology, science, personal finance, relationships, etc. And the catch is you can't advertise or promote yourself, and that's what makes Reddit cool, is that it's mostly free from ads. And it's also the best place to find the spiciest memes of the internet. But arguably, one of the most famous subreddits of finance is one that's called WallStreetBets. Just like any other subreddit, it also has its own language, which is pretty hilarious. They call themselves autists or degenerates, which are basically people that are horrible at making stock trades, which admittedly by their standards is 95% of the people that frequent their subreddit, unless they're a Chad, which are people who buy the dip and people that YOLO into trades because you only live once and who needs market research when you're too busy making those Benjis. But most of the people don't make Benjis, they make tendies, which has nothing to do with chicken tenders. It's more to do with making $10 bills, which is code for making a marginally profitable trade to get those good boy points. But at the end of the day, you don't want to be a bag holder because that's somebody who holds a stock that has lost a substantial amount of money and therefore got wrecked. Like this person on the screen right now. That's the point this person bought the stock and discovered WallStreetBets, where he is now a bag holder. Bullish. There's a few words I'm gonna leave out of this one because I like to keep it PG, but what happened this week was crazy. Let me show you. So the stock market was turned into a literal casino when people started buying call options, which made them a ton of money, which forced the hedge funds to cover their positions, which made people even more money, until eventually the whole thing turned into a real life casino. And if you were lucky enough to get in early, you could have made some serious coin. So toss a coin to your Twitcher and let's begin. Hi, my name is Andrei, Jikh. Hope you're doing well. Come for the finance and stay for the enlightenment, because this week we just robbed billionaires. And that doesn't happen very often. Here's the thing, when it comes to traditional finance and investing, we're told to manage our risks in terms of least to greatest risks. So for example, most of our money should go into index funds like VTI or VOO, followed by maybe some individual stocks to have some fun, then maybe to have some alternative investments like cryptocurrencies, maybe some penny stocks, and if you really want to get funny with it, some meme stonks. But this week, the hierarchy was completely reversed. Even Elon Musk tweeted GameStonk, which of course increased the price of GameStop and increased the WallStreetBets subreddit community by millions of people and in a way formed its own hedge fund made up of retail investors. And that's where our story begins. So in this video, I want to cover exactly what happened with AMC and GameStop this year and why it's up over 1,000%, and I'll give you my thoughts on why I think the future of investing has changed, because the story goes way deeper than all of that. So here's what happened. So you know by now that whenever a company goes up in price, it's maybe because of a good quarterly earnings report or good sales growth, but none of that happened to any of these stocks because instead it was due to a technical exploit where people were betting on a stock to go down like GameStop. What people realized though was that if they bought enough of this GameStop stock, that it would then force these short sellers or the people that were betting on this stock to go down to then cover their positions by buying more of that stock from the very same people they were borrowing to begin with. And because there was such a short supply on the market, that drove the price insanely high, and this loop continued to repeat itself over and over again, thus increasing the price. And if that sounds way too complicated to understand, I agree, so let me try to explain it in an easier way. I'll use the infamous snakes and apes analogy. So imagine that there's an ape that has 5 bananas worth $10, and now this snake comes slithering along that wants to borrow these bananas, but instead of borrowing it, he actually wants to sell them to somebody else because he thinks that the price of these bananas will drop, which means that he can actually just give the bananas back, buy more, and then keep the difference in profit for himself. But the apes noticed that the snakes were doing this and they were being reckless with it, so the apes got together and they bought up all the bananas that were on the market. And this, of course, forced the snakes to buy more bananas from the apes just to return what they borrowed in the first place, but at a way higher price. Except in this scenario, imagine that there's not even enough bananas to go around to do that with. And that's exactly what happened. But while everyone was busy trying to turn their tendies into 1,000,000 bananas, there was something even more interesting happening behind the scenes that'll hopefully educate you and inform you about what's actually going on. And this is really interesting because it gets really deep. So here's the situation. It's the institutional investors versus retail investors. And for the first time in my life, since I've been alive, I have never seen retail investors win on such a public level. So if you want to be a part of all of this and trying to decide which stocks should you buy, you have to understand the difference between the two sides and how they each make their money. Because on one hand, we have the institutional investors, the hedge fund money. And these guys make their money by managing lots of wealthy money from other wealthy people in order to make more wealth for more wealthy people. And if you want to invest with hedge funds, you probably cannot, because you need a lot of money and there's a minimum requirement in order to invest with them, which is why for the longest time since the beginning of history, hedge funds have been the clear winners of the market. They have so much money that no matter where they move their money and no matter which stock they buy has been in some cases enough to move the price of a stock substantially, which could also be argued as price manipulation that is no different than what we've seen this week from WallStreetBets. And in some cases, they have so much money that they can destroy an entire company. And here's how they do this and how this affects us. So hedge funds take their money from pension funds and other wealthy investors where they will then make themselves richer. But one of the ways they do this is with something called an LBO, which is a leveraged buyout. So imagine a company like GameStop or AMC or Dillard's or my personal favorite, Toys R Us, because we are all Toys R Us kids. They will then use that money to leverage it in order to buy out an entire company and all of its stock. And because it is now their company, they will then take that debt that they used in order to buy that company to then dump that debt right back onto the company that they just bought. And this squeezes that company and forces it to then sell off their assets, which means selling their games, selling their toys, selling their real estate, firing their employees. And the savings that they make from doing this in order to stay afloat and stay in business goes straight to, you guessed it, the hedge funds. But get this, if they bankrupt their own companies by doing this, they will not owe a single dollar because of the way the corporate entities are structured, because that debt technically doesn't belong to them. The liability is on this other company they dumped their debt on because they are a separate entity away from them. And doing this over the last 10 years, people have lost over 600,000 jobs with companies like Toys R Us, Brookstone, Payless, Sports Illustrated, and many, many more. So ethically speaking, it doesn't really matter to them who loses jobs and who has enough money to pay for their kids, as long as their rich investors get richer. So if you want to learn more, check out The Patriot Act by Hassan Minhaj. It's incredible, but this is where we come in. Retail investors, which are people like you and I with a lot less money that have traditionally been put down by hedge funds and were told to just stick to the easy stuff and let the big boys handle the rest, like picking all the right stocks, which ironically they've actually lost to index fund investing because of their high management fees, but that's beside the point. For the first time ever, we are realizing that we can squeeze these short positions from these hedge funds by banding together through strength in numbers. Avengers! But it actually had some Reddit people ask, have you robbed your local billionaire yet? And here's what they did. This is how they actually picked the stocks to buy, because they looked at which of these stocks were the most shorted and what had the most or the lowest float, which kind of looks like this. That's stupid, but basically what a float means is how many shares there are outstanding in the market to trade in relation to how many of them were being shorted. Here's a list of the top 11 small cap stocks from Barron's that ended 2020 with the highest short position. One of the reasons GameStop did so well is because that stock had more shares shorted than there were on the market to borrow, so naturally the people that owned that stock could charge a premium for it. This forces these hedge funds to spend more of their money to cover their positions, which is also why some people on Reddit are becoming multi-millionaires. investors. But the best part is who's paying for them to get rich, because that would be companies like Melvin Capital and Citron that have both lost more than $5 billion at this point. Hedge funds are bleeding so much money that they need a bailout and a cash infusion from their investors, which goes to show you that by banding together and making the opposite trade that Wall Street is doing, that is enough for them to actually lose at their own game. But it doesn't even end there, because what happened this week and this moment goes way, way deeper, and it showed us a lot of other things too. Here's why I think this goes way, way deeper than what we're seeing on a surface level, and why I think we're living in historical times, and also why I don't take any sponsorships from any of these fintech companies, because it gives me the freedom to say what I'm about to tell you. So while this retail and institutional battle was going on, the NASDAQ stopped allowing trades, which is crazy. But it gets worse, because TD Ameritrade, Charles Schwab, Webull, Robinhood all stopped allowing people to buy those stocks. Now, if you bought the stock on Thursday, it's still okay, you could still sell it, but you couldn't buy any more, which completely destroyed the entire momentum and reason of what people were trying to do in the first place, which was to rob from the rich and give to the poor, which is also a huge, huge mistake on Robinhood's part, because that would have been a great PR move. They dropped the ball on that one. Instead, though, people were blocked and censored. What? Poor people are making money? Stop them at once, Harold. Now, on the surface, we are told that it was for safety reasons and that it's just to prevent us from YOLOing all of our money and then losing it all. But the truth is a lot more nuanced, and it's going to blow your mind. So check this out. Anytime we interact with a stock, all we're doing with these fintech apps like Robinhood and Webull is we're only using them as the interface, because they're nothing more than just the middleman. And so before we sharpen our pitchforks and destroy them in the App Store, this is something at least important to consider, because anytime we buy or short a stock, we're actually just getting our orders rerouted through to the market makers, which are the actual companies with the stocks we want to buy or short. And this is made up of companies like Citadel, which is a company I've mentioned earlier, who was one of the biggest short sellers of GameStop stock, and they lost billions of dollars trying to short the stock. And so the theory is maybe it's not the fintech apps that are to blame for stopping the trading, and maybe instead it was the market makers that were getting wrecked. Now, I'm not trying to defend these fintech apps, and I'm not just saying that we shouldn't be upset, but the fact is that we don't know all the facts just yet, and that's at least something important to consider when trying to figure out who the real culprit actually is. But either way, no matter who's to blame, the point is that when you take away financial tools that are supposed to be democratized and available to everybody, and you only give them to the wealthy, you destroy the entire concept and idea of what a free market is supposed to be. And to make matters worse, Discord banned the Wall Street server, which is crazy considering they had over 250,000 people on that server. And of course, some people are going to act out and misbehave, but that's no reason to ban an entire community for doing the very same thing that hedge funds have been doing since the beginning of time: get together to discuss ideas. And that brings me to the ultimate point of what I've been trying to say on my channel for a long time, which is this. This week was the catalyst to something called decentralized finance, which I'm sure you've heard of before, but they're these fluffy words like blockchain, decentralization, which again are just buzzwords that people thought were just used to hype up cryptocurrencies. But I think this week it showed us why we really need decentralized systems that don't have any central points of failures from greedy corporations that can just shut people down. And even Elon Musk is on our side, because he tweeted, "Even Discord went corporate." And that's a really powerful message. I think this year is going to be a huge year for cryptocurrencies, and it's going to be a major theme as we move closer to figuring out exactly what happened this week. And I think it is so cool that we are literally recreating the financial systems of today, but on the blockchain. That way we can exchange ideas, value, stocks that we can exchange with each other, whatever it is that we want, without ever being censored or shut down by some greedy corporation. It's gonna work kind of like torrenting a movie. Not that I've ever torrented a movie, I'm just saying this is like the financial equivalent of that, where everybody contributes just a little bit, but nobody owns the original copy. It's going to be distributed and decentralized, and that is so cool to know. But unfortunately for now, we don't really have any alternative choices is. And I'm not gonna mention which of these cryptocurrencies are building that because I've talked about this stuff before on my channel. But as far as what the stocks are doing, here's what I actually think. No matter what you do, no fundamental analysis you can look at as far as a company's balance sheet and how much it makes and how much it spends, and no technical analysis as far as chart patterns to try to understand what's going on, no expert you can ask, and no YouTube video you can watch that's gonna tell you which stock you should buy and how high it will go and when you should sell it, so stop looking because it doesn't exist. My friend Graham Stephan actually did a really good video explaining how shorting the stock market works. But at the end of the day, as fun as it is to follow people on Reddit become multimillionaires, no matter what, some people will end up getting really hurt and lose a lot of money. I'm going to be very careful and I'm going to withhold my judgment until I learn all the facts as far as which of these companies actually stopped the trading. Was it these fintech companies or was it the market makers and companies like Citadel? For now, I don't know, but in the meantime, please be careful investing and buying all these stocks because you never know which one of them is going to skyrocket in value and which of them is going to collapse for who knows what reason. And I know I've made fun of WallStreetBets before, but at the end of the day, this week, what they did was phenomenal in showing us just how broken our current financial system is. And for that, I give them all the respect in the world. So kudos to you guys. Also, I will leave several links in the description below this video where you can file a report with the SEC, which is a regulatory body that makes sure these brokerages don't do anything illegal. And even though we don't know all the facts, once we find out, we can use this and file a complaint and they will make sure they don't do anything sketchy again. I will also leave a link to my Patreon where you can follow and track your investments and see my crypto buys and maybe stock buys every time I do them. And also I will leave a link to get $250 worth of free Bitcoin using this code. Love you. Thank you so much. Crazy week. I would love to know your thoughts and I'll see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.